You've just landed in Rome, your bag is at the hotel, dinner is booked, and then chest pains. You get to the hospital. You hand over your travel insurance card, the one you paid $400 for before this trip, the one that was supposed to cover everything. And the clerk behind the desk looks at your paperwork, looks at you and says, "I'm sorry, this claim has been denied." You're 5,000 miles from home. You're in pain. And the policy you trusted with your life just abandoned you. This isn't a rare story. This happens to thousands of American seniors every single year. And the worst part, the insurance companies aren't breaking the rules when they deny you. They're following them. Rules buried deep in your policy, rules they never highlighted when you were clicking buy. Today, we're pulling back the curtain. Every trap, every clause, every word they use to take your money and disappear when you actually need them. Stay with me, because what I'm about to show you could save you tens of thousands of dollars. Let's start with the big picture. The U.S. travel insurance market is about worth over $4 billion a year, and it's growing fast. Because post-pandemic, more Americans are traveling than ever before. And the fastest growing segment of travelers? People over 60, that makes sense. Retirement means time. Savings mean opportunity. And a lifetime of deferred dreams means there's a world left to see. But here's what the industry figured out early on. Older travelers buy more insurance. They're more cautious, more responsible, more aware that things can go wrong. They read the brochures, they follow the rules. And the industry built a product that looks exactly like what you need, right up until you need it. Because travel insurance for seniors is not the same as travel insurance for a 28-year-old backpacker. The risk profile is different. The medical history is different. And quietly, without ever putting it in the headline, the exclusions are different too. The policies look identical. The coverage summaries look generous. But deep inside a 40-page document that 94% of buyers never fully read, there are clauses specifically designed for people your age, and they are not there to protect you. So what are these traps? Let's walk through the 4 that catch seniors most often. Trap number 1, the pre-existing condition. Look-back window. Every travel insurance policy has what's called a look-back period. This is typically 60 to 180 days before your policy purchase date. If you had any medical condition during that window, a doctor's visit, a prescription change, a test result, and something related to that condition happens on your trip, your claim can be denied. Here's where seniors get hit hardest. You take blood pressure medication. You had a knee replacement 2 years ago. You saw your cardiologist last month for a routine checkup. None of that seems alarming. But to the insurance company, every one of those events is a pre-existing condition. And if you have a health episode abroad that's even loosely connected to any of them, they will use that look-back window to deny your claim. The exact wording varies by policy, but the outcome is consistent. Trap number 2, the booking deadline nobody tells you about. Most policies offer a pre-existing condition waiver, a provision that should protect you if you buy the policy within a specific window after making your first trip payment. That window is typically 10 to 21 days. Most seniors don't know this window exists. They book a cruise 6 months out. They buy travel insurance 2 months before departure because that feels responsible and well-planned. But they missed the window. The waiver expired quietly, and every pre-existing condition they have, it is now fully exposed with zero coverage. Trap number 3, cancel for covered reasons is not cancel for any reason. This is the one that surprises people the most. Standard travel insurance covers cancellations, but only for a specific list of covered reasons. That list includes things like your own illness, a death in the family, certain natural disasters. What it does not include, a sudden worsening of a chronic condition that your doctor advises you not to travel with, a family member getting seriously ill but not dying, a State Department advisory that makes you uncomfortable but doesn't legally prohibit travel. Cancel for any reason coverage is a separate, more expensive upgrade. It covers roughly 50 to 75% of your trip cost. It must also be purchased within that early booking window. Most seniors don't know it exists until after they have already lost their money. Trap number 4, the medication disclosure landmine. When you apply for travel insurance, you are expected to disclose all current medications. If you forget one or assume it's not relevant, that omission can void your coverage entirely. Not reduce it, void it. A senior in Florida filed a $38,000 medical claim after a stroke in Portugal. The insurer denied the entire claim because she had failed to list a low-dose aspirin she took daily. In their terms, aspirin was classified as a medication for a cardiovascular condition, a pre-existing condition she had not disclosed. The case went to arbitration. She received nothing. Now let's look at what this looks like in the real world, because these aren't hypothetical traps. These are documented patterns that play out thousands of times per year. Scenario 1, Thursday, stranded abroad. A couple in their late 60s, experienced travelers, careful planners, booked a 14-day Mediterranean cruise. Their ship was canceled due to a mechanical failure. They found themselves stranded in Athens, Greece, with hotels to pay for, flights to rebook, meals to cover, and excursions already purchased. They had 2 forms of coverage, a premium travel insurance policy and Chase Sapphire Reserve credit card protection. They filed claims with both. It took months of follow-up, receipts for everything, documentation of every cancellation letter, multiple phone calls a week. Eventually, both claims paid out, but only because they had meticulously documented every single expense from day one. Most travelers don't do that. Most travelers trust the process, and the process, without documentation, often fails them. Scenario 2, the stable condition trap. Many policies cover pre-existing conditions if they've been stable for a defined period, usually 60 to 180 days. Stable sounds reassuring, but insurers define stable very specifically: no new symptoms, no medication changes, no new test results, no new doctor visits. A 68-year-old woman from Texas had type 2 diabetes, well managed, unchanged for years. 3 months before her trip, her doctor adjusted her insulin dosage by a minor amount during a routine visit. In the insurer's terms, that adjustment meant her condition was no longer stable. When she required medical attention in Costa Rica for a diabetic episode, the claim was denied in full. She had no idea the dosage change had any bearing on her cover. When a claim is denied, the immediate aftermath is overwhelming. Insurance companies have dedicated claims departments. You have a phone and a policy document you're reading for the first time. The appeals process is real, but it's designed for persistence, not for people who are exhausted and in pain. You need to file written appeals with supporting documentation within specific timeframes. You need medical records from foreign providers in English. You need letters from doctors explaining the nature of your condition relative to the claim. Most people give up, and the industry knows this. The American Association for Justice has documented that major travel insurers deny between 12% and 28% of all claims filed, with denial rates significantly higher for policyholders over 65. The majority of those denials are never appealed. So what does this mean going forward, and what do you do about it? The travel insurance industry is not facing meaningful regulatory reform. Most states regulate insurance at the state level, and enforcement of disclosure practices is inconsistent. The fine print will remain fine, but here is what you can control. Step 1, buy within the window. The moment you make your first trip payment, any payment, start the clock. Buy your travel insurance within 10 to 14 days. This is the single most important action you can take. It activates your pre-existing condition waiver and gives you maximum coverage. Step 2, disclose everything, every medication, every condition, every doctor's visit in the look-back period. Do not self-edit. Do not assume something is too minor to matter. Disclose it all and let the insurer's underwriting determine what's covered. An undisclosed item is an insurer's legal exit ramp. Step 3, seriously consider cancel for any reason coverage. It costs roughly 40 to 50% more than standard coverage. It covers only 50 to 75% of your trip cost, but it removes the most common denial pathway. Though this wasn't a covered reason response. For trips over $5,000, it is almost always worth the upgrade. Step 4, document from day one. Keep every receipt. Screenshot every cancellation notice. Record every phone call date and time. If something goes wrong, you are not building your case retroactively. You already have it. The travelers who get paid are not the ones with the best policies. They're the ones with the best paper trail. Travel insurance is not optional after 65. But buying the wrong policy, or the right policy the wrong way, is worse than no policy at all. It gives you a false sense of security that disappears exactly when you need it most. Now you know what to look for. Now you know what to ask before you buy. Thank you for watching, and subscribe to Deep Route if you like to get enlightenment like this.